All right, hey there, guys. Sam here. Now, let's see. It's 4:30 now for me, Central Time. I am now disconnected from data, and I had intended to do this yesterday, but I got called away in the afternoon. So it seems that perhaps would be helpful if I went over some of the things to look for in this initial balance trade. This is an odd thing, right? I think I don't know, we're kind of jesting. There's 45, 46 days in a row where this trade has been profitable. And similarly, back before we had created this, the TradeDevils indicators Discord, back when it was just the TDU Discord, I had the same problem over there. I could not get people to take this trade. I mean, a few here and there would take it. It didn't matter how many days in a row I posted profits. Just did not matter. People were just afraid to take it. And to some degree, I understand that, right? When you're talking about testing a level, coming down to a level to test it, instinctively, right? The market's coming down, so you think, well, shit, man, I can't buy it. I get that, right? But it should be at this point, after seeing me post results here, day after day after day. Now, it's not every day, right? This is not a 100% winning strategy. There are days when they are going to blow right through it. It's often quite obvious because we are not the only ones who know about this. Although I will say I'm the only one that teaches this trade that I know of. I've never seen anyone else teach this trade, and I've been around the trading markets for 30 years. Nobody taught it to me. I just noticed it literally from screen time. I don't know anyone else who teaches it, and there's part of me that thinks, "Oh God, this is so good. Why are you giving this away?" And it's one of those examples where you've heard the story where people say, "Why are you giving away your secrets?" Because you could post exactly what you do, and to the world to look at, and no two traders are gonna trade it the same way, right? It's a funny thing about trading, right? Everybody has their own, psychology about it and their approach to it. And I could put this in front of 10,000 traders and be interesting to see how many actually took it. So, but my point is here, for you guys who have this initial balance indicator and see me posting the results here day after day, I mean literally it's damn near every day. And I'll say, okay, who got a piece? Who got some? We did first test, right? First test. Who got some? And maybe we got over 500 traders in here. One will post, oh, got a piece. It just baffles me. I can't understand it, right? I don't know what else to do other than, as Jeff suggested, maybe just do a video here and walk people through some of the nuances here. Now, again, it's important that you recognize that this is first test only. Only can you rely on this. Once we get past the first test, now the initial balance still likely to provide support and resistance. As I would tell you, in addition to VWAP, these are the two most important levels on the board. Period. You have to know where these are. If you're not using our indicator, mark it yourself. Right? It's just you have to know it's there. And part of the reason is because when we break out of the initial balance, it brings in the higher time frame traders, right? We stay tucked in the range of the IB. Often they're not interested. Get a big day like this, well, they're interested. So, I mean, God, there's a lot to talk about in what happened today, particularly down here at the low. But I'm easily distracted. So let me try and stay focused here. Now, today actually was a little bit trickier because, and I'm going to bring in the footprint chart to show this here, because while the trade was profitable, they made it hard I mean, this would require someone with a little bit of experience. So you'll note here, this is the first test. This bar right here, I've got here, I should probably go to a 1 minute. Let's go to a 1 minute so you can see it a little bit better. Oh, come here. All right, come back here. Okay, so here it is. We'll go to the 1 minute. So here's the bar, right, where they just tried to crush it. Come back here. All right, so here they're really trying to drive it down here. Right now, the first thought is, oh, they're just going to fill the gap, right? So that's what's happening, which eventually, of course, they do, and well beyond that. But look at the snapback here. That's what I want you to focus on. So this is the bar where they're jamming for, and big size came in here to try and break. Because again, we're not the only ones who are aware of this, right? I may be the only one teaching it, but plenty of people recognize what happens at the initial bounce. So let me bring down the footprint chart here and show you what that looked like, because this is actually a good example of what you're looking for. So here it is right here in the footprint chart. Now I use a 10 range here, and it was, I preferred, a lot of you guys using a 15. I prefer the 10 myself, but that's beside the point. Now here's the jam right here. Look at this push down here. It's hard to do this on the footprint, but look at the drive down here. But in particular, look at the size. Of course, we get a stacked imbalance here. Look at the size here in this candle. I mean, they are jamming hard here. But so this is the break, and often on a day when there is intention to break through, that's exactly the kind of volume they need to bring to break the IB. Because again, if I can figure this out, I promise you there's plenty of others writing algorithms that have figured this out. So this is something that you will see on those days when they intend to break it and continue to drive it lower. But what you see here, so this was a little nerve-wracking here when you saw that. My first thought was, oh shit, man, it's one of those days where they're going to just hammer it. But look what happened here. And this is actually a critical piece to it. Oh, here, we'll use that. If you want to use the nicey tick here in addition here. So look, if this actually ends up being our tick, it was the tick low of the day. I think it ends up being a double bottom low here. So we get to a minus 955 here. Now anything below 800, heads up, right? The odds are very high that you're going to get a snapback here. It's just how the market moves and how the buy sell programs work, which is what you're getting here, the uptick downtick. So as this is driving down here and you see this massive amount of size, I mean, what shit. It was probably 1,500 contracts sold right there. Here's the low of the day. Here's the tick low. Now, this bar here is at 1031. We're within seconds. Within seconds, we're snapping back. And that's why I took the trade, because as quickly as we started to come back, and once we got over the POC here, which you see is right, there's actually a zero print right there. Once we got over that, it was game on, because these guys have now got to cover. They have to cover. Right, so and this is why this is ideally this is a scalp type of a trade, because you don't know how far this is going to go. And I will typically use either 3 or 5 ticks for my first two. Right, I typically trade it in a 3 lot. So let's see. So here, this would be kind of a good example. So a 12 tick stop, 5 tick target, and I'll 12. But I'll, if I like it, I'll give that a little bit more room. So that's a reasonable way to approach it. Max, I mean, absolute max would be 16 ticks. You don't want it, especially if you're trading size, and it lends itself to trading 2s or 3s. You don't want to get yourself in trouble early in the day. So you got to really, it takes a little bit of time of watching this so you know what to look for. So I saw this morning. I couldn't hit the buy. I went market. I couldn't get in fast enough. Once I saw this start to come back and I saw these guys all here, that's your classic trap traders, right? They have to cover. So what's happening is their covering is what's getting your stops out. Well, now here we go boom, 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 boom. Here we go right back up to the prior highs here. So this is a pretty good rip off of that low. So the key that you're looking for is a combination. So if you're new to this trade and you're like, oh shit, I don't know, I've heard about that, and he shows profits on this in 9 out of 10 days. This combination here of at low ticks, ideally, right? You're not always going to get it, right? Sometimes you may only get 500-600, but when you're in the red zone here, which is below 800, and you see this start to come back, even if it's outside of it, that's a trade you want. Now, there are many days where it'll be just to the tick. You might get 1 tick through, 2 ticks, and the algo will fire and up it goes. And that's the premise here. There's an algorithm that sits here every single day of the week at the high and the low, and it fades the first test. It's if you think about it, it's not an unreasonable supposition, right? Oh, well, that would make sense, right? The fire up an algo. Shit, there's an algo on, fuck, if the Fed farts, right? There's an algo. There's so many algos in here. We'd have no idea how many are in here. There's just a few that we can identify. Well, this is one of them, right? Because it's so consistent. Again, I don't know how many thousands of hours of screen time to notice this, but a lot. So I look for it every day, and it's both at the high and the low. Now this was a little bit extreme because this one went far, right? This one went from the low we go here. We went 14 ticks, right? So you can't. What you cannot do here is just sit with a limit order at the IB low. That's not how you want to trade this, because I don't ever do that, right? I've been burned too many times just leaving a limit order. Say, oh, okay, it's coming back to a 50. I'll just take. I never do that. Well, I used to do it, right? I tested it out. I don't ever do it anymore because I want to see the reaction there before I enter the market. So here, as this is happening, and you see this, yes, first thought is, oh, they're blowing, we're going. But boy, it snaps back so far, and then ultimately, right? Of course, then down we go. And the point is, it's not the same situation. Come here. It's not the same situation on the second test. It's only the first test. Now, having said that and shown you an example here, and this was a tricky one. So this, if you got stopped out here, it would be understandable. The mistake would have been, well, great, always easy in hindsight, right? I'm very aware of that. But the mistake would have been seeing this, and then once we're back in, not trying to look for maybe a get well trade here, because this was, they were pumping pretty hard, right? And we go 1, 2, 3, 4, 5, 6 bars before we double top up here. There was plenty of time for you to get in here and get a piece of this move. Look at the size here, the size here of buyers coming in and stepping, and you've got stacked imbalances here. You've got the POC of each of these candles is climbing. There's a lot of evidence here that, oh, okay, maybe they're snapping back. So that's it. This is the course of this video here. We'll probably do 4 or 5 days. This is one of the trickier, but what made this one very tradable is that we had low ticks of the day, right? And then you can kind of see it. Now let me go back a day, because it was also, again, I wish I could tell you, oh, just put your limit order right at the IB and you're going to be fine. There's some nuance to this, but you want to be looking for it. So let me get that out of here, because Wednesday was a little tricky as well. But let's just go back a day here and trying to make my case here without making this a 2-hour video. Okay, so IB high despite this insane rally we had, IB high never gets tested again. Pardon me, never gets tested. Okay, so let's go back a day here on this 1 minute chart. Okay, so here this was a little tricky as well, and we'll look at it in the footprint. You'll see very similar set of circumstances here. So let me get this up here. We're back a day. All right, so here's 1033 right here. So this is the candle that takes it down. Now we start to snap back in. There definitely was a scalp here. I took this and got my scalps out, but then my runner got stopped. But then there was another chance to get it because the ticks were good. The ticks were friendly. So let me bring that over here. All right, so you can look at, here we'll look at it this way. Okay, so this candle here is 1040, which is, where am I back too many days? Yeah, this is 1040. So here's 1030, right? At 1030, we get into the red zone. We get a low of minus 900. That's this candle right here. We start to snap back. We don't get a lot of traction here. As I said, my scalps were out, so it ends up being a scratch trade for me. Then we're back down again. It looks like, oh, we're going. That's all we're going to get. Now we're going to head down, but yet we get divergence here. So we get a new low in price, but we don't get a new low in ticks. So this candle low here is 10, that's 1040, and here's, let me get 10, here's 1040 right here. So look at the difference here. We only get to negative 451 here as we're putting in new lows, right? Something's not adding up there. So that was a second opportunity, and you'll see it again. Let me get the footprint chart up here. Oh, here, I'm going to pause for a second so you don't have to watch me scroll. So hang on one second. Okay, I'm back to Wednesday here. Now you'll see it here. It's also a little tricky on this day, but you'll notice here the chop that's happening as we are approaching the IB here. So we come down, we get a break, there's a snapback, same kind of thing. Your scalps likely be out. If you're trailing with a runner, that could have been a scratch, but you had another chance at it here. And then here, I'm supposed to be making this easy for you. These last 2 days have been a little bit more advanced. I would say it that way. So let's look back here. So now we're to the 22nd here. So here's 1033, same thing, right? 1033. There's that's when we first hit it here. This is 1033. This is low tick of at that time it's low tick of the day. So we're at minus 870. We're in the red zone, right below 800, right? Heads up, you want to be looking. So we at that time, it's the low tick of the day, minus 890. This is this bar right here. Now we snap back. So many people will wait for it to come back into the IB. Often that's what I'll look for, is are we back into the IB, because I'm looking for that snap. Well, there's more there than you probably realize here. So on the first little bounce here, let's get that. So we had three I think I had some days I use 3. I don't know why, but sometimes I use 3, sometimes I use 5. I was using the 3 yesterday, and it was partly because this was coming down awfully hard. So this was another scratch the first time. But if you know this, if you're looking for this trade, you want to be looking again, because so my trade ends up a scratch, right? So the 2 days in a row I had scratch and then re-entry, because I know this is an area to be looking for this kind of activity here. So the same thing happens. So again, just like the prior day, I get a new low here at 1040. I get a new price low at 1040 here. Oh, where's 1040? 1040. Look at the divergence here. Now again, it's almost exactly like yesterday. I've got new price low, but the tick is not as low. We're going back. So if we look at that, and it showed a little bit better, and I posted this in the room for you guys here, because this is kind of what you're looking for. So here was the first, let's see. Here it is. So this in a range bar, it's going to look just a little bit different than us looking at it on a minute bar. Right, so you can see drive, size is coming down, right? So they're starting to add here. Now here's, as we break, you see the size get added here. So again, right, you never know in real time, right? Oh shit, are they going to hammer it here? Is this the size buildup that's coming down? Well, look how quickly here we get an unfinished auction here. We pop back up. We come back to this zone here where we had an unfinished auction here. We come right back, finish the auction. Now we come down, we dance a little bit. It's unclear what's happening here, but then we get just a beautiful example here of exactly what you're looking for. So now they're back down here, pushing again. Here's the size, looking, oh, okay, well, we've had the test. We're going, right? Here comes the size. Now these guys, once again, this is exactly what you're looking for down here. These guys have to cover, right? Because they're looking, this is breakout traders. They're like, oh, we're going to front run the breakout, right? I told guys this in the room every single day. This is lows are the single worst place to enter the market. Just there is no worse place than you can find. You're going to get away with it some days. That's bad news for you, because then you'll just do it again. It's the single worst place to enter the market, in my humble opinion, because you're vulnerable to exactly what happens here. All right, so the breakout traders are all excited here. They're thinking, oh, we're falling through the floor, and how quickly, look at the size come back here. Now, so we get the POC is down here. We start to rip here. Now look at the stacked imbalance as we're coming back to the IB. You don't think these guys are nervous? Yeah, they're covering, right? And that's often what gets your scalps out, just like we were looking at yesterday. So these guys are trapped here. We start coming back. The tick, we just saw the tick divergence. Now, well, there's, this was. And this is a little bit more advanced here. So just to the McGinley, there's another 12 ticks, right? So if you've got taken 5 and 3, this can be a great example of having a little bit of resilience to say, okay, if we're not breaking, right? So because if at this point here, if they were going to drive it down here with size, that would have happened right here. Right, but it's not happening, and in fact, if they were going to do it, they'd been reflected in the tick, right? So the divergence here was the second key. All right, here. So I've started with the 2 trickiest of the week. Now you'll note here from this reversal down here at the IB low, what do? All right, we go right to. Oh God, here. Let me pause here. I'll get you there in a sec. So we just looked at the low. We go, oh, it wasn't a straight line, but we go pretty uninterrupted to the IB high. Now here, this is at 1248, the first test of the IB high. Now this is a little bit more traditional, where we get a wick that goes out of it here. You see the size up here. You see sellers come in here at, well, we're at second price there, and then we drive it down to the McGinley. That's that's the 21 McGinley. Very, very common price action for this trade. But you'll note now a little trickier at the lows today, and we've had all of, I mean, this massive volatility the last couple of days. So trading has been tricky for all. But I mean, again, here it is, right? It's just right in your face. Like, oh, this one is more typical. Oh, we tap it, we get 3-4 ticks through it, and then we start to come back in. Here comes some size. Here comes a little bit more size. We come down here. All of a sudden, we have, we got the POC starts to flip. And I mean, what's there? So say you waited, you're not going to get the absolute tick high to tick low, but there's 18 ticks right there. All right, so three out at 5 or 3, right, depending on your preference and your risk tolerance. And your stop rate, what was the stop there? It's 4 ticks went through. So to the McGinley, there's 26 ticks. Now again, right, it's not the same thing. Second test, right? It's only the first test. Perfect example. Okay, let me pause here and I'll fast forward a little bit. I don't want to get bogged down with the footprint chart here, but I gave you the 2 trickiest examples of the week. Hopefully you see, okay, well, there's something there, so I want to start paying attention here. This one is just straightforward, right? There was no test of the IB high. Here's the low of the day, 1032. See it back in, first test. This is it. Oh, it actually you had a little. Well, you actually had it twice there. Another one where you had it twice. So here's 1030 exactly. What did we get there? 1030 exactly. You had there's, what do we get? 14 ticks, right? From the tap of it, there's 14, right? So if I just showed you my ATM that I'll often use here is 5 and 12, right? So all 3 got out there, right? Now sometimes, right, you can let that runner go. So reasonable targets are a McGinley, the IB mid, VWAP, right? If you're going to get if you're really going to have a ranging day and you get a true trend reversal here, but you know, nothing wrong with 14 ticks. All right, let me go back. Oh, then you'll find this interesting, or at least I did. I didn't trade this day, but lo and behold, this is the shortened hours day. It's 1032. All right, classic day for it. What we got there? 4 ticks, nothing. Ends up, we get back to IB mid, opening range high. So a little bit of a wiggle down here. So whether you took it here, go again, right? This is kind of an off day. I doubt anyone would trade that. I didn't trade it all that day. Bear with me here. We'll get through another couple of examples. This was a great example. All right. So now we'll see. We're back to now we're back to Friday because the holiday was Monday. I'm just going back a few days here just to make the point here. What do we got there? There's 1022. So here's the first test of the IB high. We get through. Right, we get up, we get through, goes 8 ticks through, goes all the way. This is coast to coast, right? This is the dream trade. So now, note what happens here. All right, so first test of the IB high, right? So if you once we come back in, right, scalps, runner, all profit. Right now we come to the IB low. What do we do here? Right? I mean, I post these in the room, guys. It's amazing to me, right? There's only 55 ticks. It went through by 2 ticks, right? First test of the IB low. Just a great example. High and low. In fact, I expect to make money at the high and low every day. Now, there are definitely days where it's just going to blow through, right? There's news. There's some reason, right? There's always got to be a reason where you'll see that it's just massive size come in as they approach, right? That they fully intend to break it. And you'll see it. That's the advantage of a footprint chart. You can see that monster size as they come through it. No, but let me just go back here. I won't digress too far. Let's see. I think I only have 7 or 8 days here. Okay. This. Oh, maybe I got a loser day here, right? So it's actually good. I don't want you to think this is every freaking day because it's not 100%. Well, this one they front run it. I'm starting to see that a little bit more and more. Let's zoom in there a little bit. Starting to see some front running here. Oh, am I around the right day? This is, hang on a second, let me make sure I got the right. Okay, good. I'm glad here's a day where it did not play. Right, it's not going to be every day. It's not a 100% guaranteed winner, but it's a very, very high percentage winner. So here's a loser. Well, I mean, you might have gotten your scalps out. Oh, shit, probably not, right? Well, you might have actually. I can't remember if I traded this or not. There's 7 ticks that you had off of once we're back in, so likely it would be a scratch. So if you got 2 out at 5, and then got your runner, right? My runner will just go to scratch, right? So my worst case, if I get the scalps out, is that it's a scratch. Well, this was a scratch. Never saw the IB low rest of the day. So, but there's a good example, right? It's not every day, right? Here, there's enough. Well, we pause there. It looks like they front run it, and often we're starting to, cat's out of the bag a little bit. That people are onto this trade, right? Nobody, again, I've never heard anybody talk about it prior to me talking about it. Not to toot my own horn, but if there is somebody, I'd be curious how they approach it. Oh, here we'll wrap up here. All right, here's 1035. All right, here up. Don't even need the footprint chart here. There's 21. All right, if your stop is well, shit, if it's 21, right, both are out. Retraces. This is often a great re-entry here if we're not, depending on what the tick is doing. If we don't get back outside, we're likely coming back to the mid. No test of the IB low, and here, here's another good one. Again, let's see if I've got an IB high there. No, I don't. All right, so we don't get both sides here. So here's 1047. There's the first test of the IB low. Right, you can see, right, the wick rejection, right? It's not hard to spot, right? So what do we get there? There's 58 ticks off of the first test. Have I got another day? Maybe I do. Let's just see what I got here. 945. Here's another one where we're pausing, but we didn't get much here, right? So what did we get there? You're back in. You got 12 ticks, right? So decent scalp there, right? I don't know whether you got your runner, you scratched there, but you certainly got your scalps out. If you got a 12-tick target, as I do on that, you might have gotten filled on the runner. But if you were pushing for a little bit more, which is easy to do here. Oh, let's see. That's that 1030. Make sure I didn't get that wrong. That one is, no, pardon me, I got the wrong one. Let's go here, and what do we get there? That was usually, right, when we're out like that, you'd wait for it to come back in. There's 13 ticks. Yeah, let's get it. Maybe you got 12. About 12. Right, so you're back in. There's 12 ticks. Right, so if you're running as I'm running here with 5 on the scalp and 12 target, you may have gotten to touch no fill. It's possible, right? Is there anything more annoying? All right, and then now, of course, now the IB just becomes the support for the rest of the day. Which is why, now the other thing I would tell you here is, you guys hear me say this a lot. The IB, once you're, other than the first test, right? Unless you're coming, get that off here. I know that's annoying. The thing about the IB, where you do not want to be trading, other than the first test of the IB, and again, this is a lot of years of watching this thing. This is a poor place to be looking for breakouts, right? Because this is very algo thick here. We're past the first test, right? So now often it'll do this. It'll just ride the IB, and it's really, breakout traders are trying to front run the push here, so it's, oh, breakout, stopped out, breakout, stopped out. Oh, we got one, which is good news for us because that means they'll keep doing it. But this is not a good place to be entering, right? You see it here. It's very common to see it just kind of ride the rails, what I call it, because you have absolutely no edge here. All right, now, I will say, if you get a breakout like this, and here is not a great example, if you came down here, the only time I would consider this is as a potential support zone, looking for a kick out of it. But when you're trying to enter here, bad idea. Just trust me on this. I've tested it for a long time. You just have no idea which way this is going to go. So riding the rail, not a good way to trade it. You get down below and you're coming back to it. Very nice trade. But if it's just doing this, you don't want to try and enter there, right? You have no idea. You have no edge, absolutely no edge. So why trade, right? I know the temptation is like, oh, it's going to go, right? And in hindsight, you're like, oh, look, see, I told you it was going to go. It's not that way in reality, right? We all know that. So here's let's see if I can find another day riding the rail, and then I'll wrap this up. It's not uncommon, right? So here, to a degree, you're just hovering around it. Here's the holiday. The volatility. Here, I'll finish with this one parting thought here on the day today, because it's such a striking example. The market's just free falling here. I was looking for news. I was what the hell? Well, once we did this, here's the IB test, right? And then we come down. In fact, I wrote this in the room. Many of you probably saw this. Is that? Oh, here I just read it here. Well, let's see if I can get a picture of it here. for you guys, and there's my mouse, which happens to me all the time. And oh, you guys aren't going to be able to see that here. But my comment was, look, when the market's doing this, right, it's very tempting to think, oh shit, well it's gone too far. Well, I want to be a buyer. Well, the only play here as a buyer is to be trading counter trends based off of extreme tick readings, right? So, and we didn't. It actually was not that great today. Right, these extreme tick readings down here, which is why the market kept falling. This is at 10:30 in the morning. That was our tick low of the day. Right, the rest of the day, right, this was, and then we had the turnaround. But when the market is falling like that, it's very tempting to think, oh man, it can't go any farther, right? So I'm going to pick the turn. And my comment was, guys, the only longs here is if you see extremes in the tick, which we did not get other than the IB low. If you get extremes in the tick, okay, well, you can scalp some counter trends here, and you see you had a few, right? I mean, that's, some of these are bigger than would appear to your eye, right? There's 23 ticks, but you're so very counter trend. And then my additional comment was, if you're your choice is, rather than try and pick the turn and do those little counter trend scalps, let's wait for a higher low followed by a higher high. Right? If we wait for that, then we have the chance for the trend change to happen, right? And here, this is the first higher low that we get, right? So because if they're going to keep crushing it, right, we're going to keep going. Oh, can't get a new low. Oh, now it's undecided here, although it's likely a measured move, right? You guys know that's high probability, right? So, right to the golden zone. If I can finish that here. So, swing, golden zone, gets the target. Okay, so that was the first sign that perhaps, let me get that off there, that perhaps the trend was starting to change. And then we get in a series, right? And then we get the next one. Now you know it's likely coming. Oh, was it this one? I think it was this one. All right, now we got another one coming. Right, so now we see here, remember the algo will alternate pivots, right? If one breaks, it'll go back a pivot. So you see it here, gets the target, and then it goes again, right? Here again, this is how you knew, oh, probably trend change is on. Right? You start to see the measured move targets hit, and you got little micros in here as well. There was a point here where it got stuck. Now, when we come back up to the IB, look, this is the resistance, right? Just as it will be, right? Can't get through. Now we're through. Right? Back to the open, which is just astonishing. The point being here that it sounds like, oh, come on, man, that's too basic. Come on, right? Something else has to happen. It can't just be as silly as, oh, higher high, higher low. Yeah, I've read that forever. Yeah, but that's not really what's happening anymore. Really? You sure about that? What marks the trend? What's the low of the day? What's the next pivot, right? That's the first higher low of the day. And then we go, and just a massive V recovery. I mean, just insane, right? Just absolutely insane. Well, really what's happening here, this is just whale farts, right? These guys are just messing with retail here. Did something change in the macro picture from 12:15 to 1 or 2:30? No. Bargain hunters. Oh, my partner suggested, possibly could we hit the 200 SMA on the daily. That's quite a reaction to come off of hitting the 200, but that could have been it. But the bigger point is, if you're looking at this going, God damn, I'm dying to trade, man. I'm here. I've got the day ready to trade. You gotta wait, right? It's annoying because you're looking for this to happen here, but it's not until we get the higher low that you can start really, okay, maybe now I've got the potential for a trend change, and then it's nothing but higher lows and higher highs until you get back to the open, and then we get a little sell-off. It sounds stupid, like, oh, come on, it can't be that simple. Right, so much of trading, right? We overcomplicate it, and we end up screwing ourselves in the whole process. So, all right, that was longer than I intended. I don't know. Hopefully, I gave you a few clues here as to what to look for. Okay, I'll wrap it there, guys, and hopefully you picked up something and start looking for this, right? In conjunction with the tick, right? If you can find low ticks when we're first testing, pull the trigger. Okay, guys, talk to you later.